The Denver apartment market has gotten a lot of attention recently, and deservedly so. But today we thought we'd take a look at its little sibling city to the south, Colorado Springs. Is Denver's strength extending down to the Springs? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Colorado Springs update. The short answer to the question we teased earlier is yes. The Colorado Springs apartment market is performing very well. Not up to Denver standards, but certainly strong, well above the national averages for rent growth. Same-store rents for new leases jumped 6.6% year over year through Q1. That's the largest increase we've seen here in 7 years. And this market has followed a rather unique pattern, as you can see from the chart. It had produced some big rent hikes early in the recovery, only to give way to some very lackluster numbers from 2012 through the first half of 2014. The rent growth patterns here don't really follow any patterns we're seeing in the local economy. In fact, job growth here has been remarkably steady, though unspectacular, for the last few years. And that's pretty typical for a market that isn't terribly diversified and that is very dependent on the defense industry. In fact, each of the city's top 4 employers are part of the U.S. Defense Department, and together they comprise nearly 20% of the city's workforce. And we see similar bumpiness in occupancy rates for Colorado Springs. Much of this volatility is just part of the game for smaller markets like this one. So as of Q1, occupancy registered at 95.6%, down 30 basis points in the quarter, but up 110 basis points year over year. And to that point, we've seen a good deal of movement between individual submarkets. Most recently, the largest rent hikes and some of the better occupancy rates are coming in the northwest portion of the metro. As of Q1, as you can see, rent growth came in well above the metro average, and occupancy came in at 95.8%. That was up 110 basis points year over year. The only submarket with a better rate in Q1 was the central Colorado Springs area. Now, recent history tells us that the recent hot streak in Colorado Springs probably won't last all that long. It just doesn't have the big economic anchors we see in places like Denver that could produce the consistently strong rent growth. However, all signs do suggest that Colorado Springs should continue to see at least some solid growth long term. That all assumes, of course, that the defense industry remains a stable presence. The big risk, of course, is that Colorado Springs is overexposed to the defense industry, as we talked about earlier. And so should anything ever happen to those jobs, we could see some significant troubles like we've seen of late in the Virginia Beach, Norfolk area. And that's going to wrap us up for Colorado Springs. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.